Hello and welcome to the Theory of Thing Investment Podcast. My name is James Wheeler, Managing Director of Barclay Pearce Capital's Wealth Management Team. We are live from Studio 86 here in the Sydney, in Pitt Street studios at whatever we are on Pitt Street, at the Barclay Pearce Capital Studio, whatever. I'm joined by Heath Moss from HLM Investments. Heath, how are you now?
Very well, mate. Very, very well. We're using Zoom this week for the first time, hey, mate. So it's a little bit better, a little bit clearer. No delay.
Funny and perfect, mate.
Beautiful. That's what the listeners want to hear, mate.
Yeah, so goodbye StreamYard. Hello, Zoom. It turns out that we had a subscription to Zoom this entire time, and so why not use it? I think I managed to get through all of COVID without paying for Zoom once. And now here we are in 2024, and Zoom is just doing its job as a podcast recording area. And I don't think I've actually used Zoom let's think about those COVID days. I don't think I've used Zoom since those days to do anything.
Yeah, I've used it a little bit. And the funniest thing during COVID was Kathy Wood, pumping Zoom up for her fund and saying how good it was, etc. Subscriptions were going up, etc. And all of a sudden that your session is about to end because you haven't paid for it. It pops up on the screen. You couldn't script that any better.
I tell you what, though, it's funny. So speaking of Kathy Wood, I'm just getting the thing that was up here that she did. It was just like she wrote an absolute bat poop tweet.
I know what you're talking about.
I'm gonna find it. Where is it? No, it's not that.
It was a long one.
The last part, I got to read it. Okay, yeah, I'm going the wrong way. The last part that she said was this crazy thing of saying.
Basically, I think it was capital losses are an
asset. As a result, here's the quote. I'll put it on. We've got to get into the hang of doing the screen sharing, so I may as well just do that. So there you go. Share.
Fantastic.
Right. Is there anything confident? Have I shared anything confidential there? Nope.
No, just
as a result,
credit card. Yeah.
Yeah, good. As a result, there's nothing on it anyway. As a result, you can pay the bill if you want. As a result, so quote Kathy Wood. As a result, our trading-related capital tax losses should offset trading-related capital gains tax gains for years, an underappreciated asset associated with our strategies. The best thing that the punchline is this tweet has been deleted. Somebody obviously just said, Kathy, honey, darling, sweetheart. You don't advertise that as being a selling point for your fund.
No. I mean, and it's not an asset.
No words, mate.
I mean, if they're getting taken over, maybe you can treat it as an asset. Here in Australia, like those losses can transfer over. But I mean, for an investment fund, no, it just shows how poor your performance has been.
Yeah.
You're just highlighting how poor your performance has been over the last however long. So
absolutely disgraceful. So meanwhile, there was an assassination attempt on former president and future president Donald Trump. We've had him locked in as basically a shoe-in from late last year. We had a few doubters on that one. It's
I was one of
been
them.
more and more confirmed after the debate for sure, and then this attempt and his reaction and people's reaction to it. Not only has it made him far more popular, but it's also been this weird change that's sort of taken over of people are now unashamed to say I support this person.
Yeah.
And that's a big shift in societal norms where it was just like you couldn't, the shame of saying that you supported President Trump. There's something else that I've got here, which is interesting. If you just want to start, just a little bit. Oh, sorry. First off, mate, how are you going? What's the latest?
Very good, mate. Very good. Nothing much. End of school holidays coming up. We went and saw, what did we see? Inside Out. We went and saw Inside Out with the kids.
That's good.
I can't believe. I mean, it was a good movie. It was better than the first. But I can't believe that thing has grossed like 1.2 billion already. I mean, the first movie I don't think did anything spectacular. But this thing seems to be taken off for some reason. It's Disney's first $1 billion film in about 18 months. They used to average a $1 billion film a year.
Yeah.
But last year they broke that. And this wouldn't be the film that I would have thought would have broken that streak. But the cinema was packed. We went to Timezone, mate. They've upgraded the time zones. I just watched the kids play a thing, but it's phenomenal. If we had that growing up, we had the normal. You remember time zone lock-ins? Remember, you used to go to Timezone and get locked in there for 2-3 hours with your mates, and you're sitting on there.
Only the rich kids had those birthday parties, mate. I wasn't that kid. I wasn't that kid growing up. You know that,
mate. I got invited to a few of them. I never hosted them, but they were the dream. Playing Ninja Turtles or Simpsons and all that sort of gear, and Mortal Kombat and whatnot. But they're far more elaborate these days. It had bumper cars, bowling, laser tag, all the latest games. It was phenomenal. My kids ran it right, and I just watched them have a load of fun. We burnt through I reckon it was $90 really quickly.
Yep.
It was really quick, but a lot of fun. I wish they were around when I was a kid like that.
Yeah, no, it's true. I do long for that sort of stuff. I once had to, where was I put Warringah shops a while back. And I was waiting. It was a quick sort of drop kid off. Had to wait an hour for her dance thing to finish when I was up there. I just went, you know what? I got $50 in my pocket. I'm going to go and get a card for the alternative. It's a different sort of time zone. It's not called time zone up there at Warringah Mall. It's called something different.
Yep.
Part of that whole juice box Tetra Pak debate that we have between us and South Australians. But anyway, or a popper, as it's actually properly called. It's not called time zone. And I just busted $50 there, and I just went, I had the absolute time of my life. There's just something about just to cut loose and be a bit of a kid again.
Well, Dave and Buster's in the US are extremely popular, and that'd be their version of Timezone. But they've also got a licensed bar there with a sports bar with sports all over the big screen. So it's something that they need to get over here quickly and do a Timezone across Dave and Buster's. And mate, I'd spend all my weekend there during AFL season.
Mate, you're making me hungry. I might go and get a burger in there as well. All right, other news. So aside from the president being an assassinated attempted, there's been a pretty significant rotation that's gone out of the Magnificent Seven and into small caps. Small caps. Is it a short squeeze? It was a 5 sigma move. Anyone who has any background in standard deviationing, that's a pretty significant event for that to happen. And the rotation rates coming off, confidence of President Trump coming in a few months, and just the valuations and under owned, now well and truly back on the way off the canvas. Amazing that it all happened a week after books close, end of financial year, and then all of this press comes out and all these things come out about what was the best performing asset class, what was the worst performing asset class, and everyone hung as much as they possibly could on small cap value hunters.
Yeah.
And what happened? Like 3 days later, just explosive rally. Walk us through it.
It went up about, I think, 11% in a matter of 4 or 5 days. It was phenomenal. And that Sigma thing, I can't remember the name of the signal. It's something breadth signal or something. It's only been triggered 5 times in the last 20 years. And each time has seen at least a 30%, an average of a 30% return on the Russell, on the small cap index. So, and I saw a analyst on CNBC the other day via bar charts, and they were saying they expect over the next 10 weeks for the small cap index to rise by 50%, and based on this indicator and the fact that,
Tom
like
Lee.
You said, Tom Lee, and it was based on, like you said, one of the most favorite trades going around is short small caps. Now that's going to have to unwind a little bit. And then the rotation from large caps into small caps. I don't think people understand the fact that large caps. This is going to sound very obvious, but it makes sense. Large caps are very large, so they need a lot of fund flow to move the needle. If only a small part of that comes through into rotation to the small caps, where they're very, very small, they only need a small amount of that fund flow to really move the needle quite explosively. So if we see only a small part of that allocation start coming to small caps, then that 50% could be true, but I'm banking on a 30% run like we saw last time it was triggered in April of 2020.
30 more or 30 from the base?
30 from the breakout. We have come back a little bit.
You can present. I don't have to push any buttons now, mate.
Okay. Let me have a look, see if I can share screen. Oh, mate, it's telling me the host has disabled participant screen sharing.
Why would I do that?
I don't know, mate. You don't like me.
Hang on. How do I change this thing?
I'll keep on talking while
you keep talking, and I'll try and figure out how the share screen works.
So,
okay, go.
Okay, let me see if I. Oh, there we go. There
Hey,
we
Jimmy
go.
Jones,
There we go. You
Hey,
see that?
Booyakasha.
Fantastic. That's the
Thought that.
Russell. If you come out further, you can see where it was banging its head across the resistance there.
Yep.
It's not far off of all-time highs of 2,450. We're around 2,200 at the moment. You see that run from 2040 right up to 2,260 on the index. Like I said, we've pulled off the last couple of days. I think that's just simply because of the explosiveness. This is like more of a stock chart than a bloody index chart, this thing.
Yeah. Well, it's the Russell, man. Like you said,
Yeah,
it can be pushed around for a relatively low amount.
exactly.
That's not an evening star formation perfectly up there at the top. That's a short signal. If you see a candle like second 2 days ago, go up there. Here's one for the chartists. It's almost an evening star. Long wick at the top, and big chunky base at the bottom. That's usually a pretty strong short signal.
I'm thinking it comes back to this breakout area around 2,120. I'm hoping it comes back there, tests it, bounces, and then we're on our way. If it does that, I'll be all in. At the moment, I'm happy to start trickling in, like using things like QSML, the small caps ETF here in Australia. The quality, it's actually got a quality filter over it. So are you getting the best of the best?
So Q small. Who's that by?
Vanek.
Vanek,
And there is a Australian dollar hedged version of that too, which is QH. Let me have a look at my notes. Sorry, QHSM is the Australian dollar version of that. Quality filter, 150 stocks, about 0.6% management fee. 80% US based. It's a global fund, but it's 80% US exposure. So you're basically getting the best of the best. And if you look at, give me 2 seconds. If you look at that chart and then you overlap, or you look at the XJO chart, very, very similar looking charts. And that's because they're both value-based indexes, heavy financials, healthcare and industrials, with a little bit of resources thrown in. But, for the same reasons that the Russell started moving. The XJO started moving as well. So that's the rotation we saw this week. And I think the sell-off the last couple of days is more about broader economic concerns. We got a bit of soft data again last night in regards to continuing jobless claims. It's just soft data again. So I think the market has switched from worrying about, rate cuts when they're going to happen. We know they're going to start in September now. The start of the rate cut cycle, we get 2 or 3 this year. I think the market's going to start focusing on the economy and its impact on earnings. So and I think I'm seeing a few things, like we've seen a lot of soft US data come through over the last, say, two quarters, but I'm starting to see a lot of green shoots come through again. Like they're starting to base, like the US economy starting to base and move out of this rough period. So coming to the end of the year, there could be a bit of momentum behind the US economy again, especially if they cut rates and that frees up credit conditions, etc., which are very, very tight at the moment. So that's the Russell. That's the big thing that happened this week. Nasdaq, you can see the big fall off there. We're off 3% for the week.
Keep in mind, it's times like this. If you want to find your entry point, you're going to find your entry point. Don't hold back on where you've set your times and set your limits and set your buy areas. If you missed out on the first rally, keep in mind that the big companies, the Magnificent Seven, if you just want to talk about it, I've gone into it again. Scott Helfstein from Global X said it so well. Long term, you want to be invested in companies that can expand their margins, so that way they've got a buffer against any shock, and that obviously they're utilizing AI to be able to do that, which is great, and they have earnings expansion. You got those two things in the Magnificent Seven, for sure, for days. So they are stocks that you want to own long term. Don't be afraid to do that. However, Jim Cramer, I was up late the other night yelling at and I messaged you, didn't I? I messaged you that. I said, I'm going to stay up and just yell at CNBC for a while. Sometimes I do that. I just get a little bit of vodka in the glass, and just the Rory McIlroy in me comes out, and I just start yelling at Jim Cramer for saying dumb stuff. He came out. He's like, I'm not buying this small caps rally. No, I won't have a part of it. It's not anything that's in there. And I think he was even saying charge Nvidia. I want to own Nvidia. Don't trade it. Just make sure that you own it. That was the kiss of death for that one a couple of nights ago. But if you want to find your entry point, get a big find. I tell you what, pull up the Nasdaq, show us a big level, go long term. Let's go right back.
This is the Nasdaq here. Oh, bloody hell! Stretch. I mean, if we had a big
you hassle me
correction,
for my charting. Come on, man. Go longer than that. Show me a weekly chart going back.
Oh, weekly. All right.
Yeah, mate. Let's go. Like from an investment perspective.
Let's have a look.
Pick a point. Hit the D button.
1 week.
And you can just...
There we go. All right. So this is a weekly.
Okay. Yep.
Look at that. I would say if there was a decent pullback, it would come back towards the high 16,000s, low 17,000s mark. Right here where that dip is, it's going to test this high around 18,500, I think, first. Look, the market's average 10% corrections a year, 5 to 10% corrections a year. We haven't had one yet, and we're running out of the year. So I think we're going to get something. Man. Yeah.
Okay.
So I think coming back to this trend is perfect. Coming back to this trend.
I was going to lift it up. So cut out the bar, lift it up so that it hits the touch points. I got to tell you how to do SuckEggs, mate.
No, it's TraderView. I hate TraderView. There we go.
Really?
I've been using Metastock for years until I stopped. So, but if you drew a line here, hang on, I'll draw a line here. Ray, there we go. Right here. So I reckon that's where we're coming back down to.
Yeah, that's about right. I've got that on that 18. What's that number there? 16.4?
18,400.
18.4. Okay. That's where I'm at too.
Yep. I reckon that's
big
where
chunky investments. I'm happy to buy, happy to own. They're on a technical basis, all care, no responsibility.
Yep.
General advice in nature, yada, yada, yada. But you got to own these stocks long term in your investment portfolio. You can't not. Speaking of other stuff that you should own in your investment portfolio, copper stocks. We've seen a little bit of movements at the station with bits and pieces. Rio potentially looking at eyeing off tech resources over in Canada, and BHP was approached by somement else. I actually wrote it in my note, but I don't have it in front of me. BHP was approached by
a Canadian company, Lumina.
Yes, that's right. Lumina approached BHP to run the ruler over a Chilean. It's on the border of Chile. Anyway. Another copper thing. You're going to see more and more M&A activity in copper. It is far cheaper and easier to just buy an existing asset than it is to go and dig a hole and dig the copper out. The copper utilization, in fact, so much so, I'm going to steal your screen share.
Go for it.
Screen share. This is from the Financial Times. Is that coming up for you?
Not yet. I can stop my screen share and get you going. Hang on. I'll stop screen share. You go.
Okay.
There we go.
Okay. Good. China's electricity grid is set for an unparalleled investment of more than 800 billion in the next 6 years to overcome strains of the yada, yada, yada. China's creaking grid represents a major constraint to progress on its green energy transition. So the same problem that we've all got, China's just got like times 1,000. And this is the stat. During the first 4 months of this year alone, China invested 17 billion in its power grid projects, a 24.9% year-on-year increase. So compared to the 3.5 billion announced. So that's just for the first 4 months of the year.
Yep.
25% increase year-on-year on their grid upgrade. A lot of copper, a lot of wire, a lot of everything that you need to have done there. Copper will. When I see things like this, I'm just like, yeah, that's it. Annoyingly, the Plenum, the third Plenum, how's your Plenum? Just came out.
Fantastic.
And it didn't have the things that I wanted them to have.
No, and that's why we saw copper sell off 3% yesterday, because they were very, very quiet in terms of stimulus and new policy reform, etc. So couldn't metals overall have sold off on the back of that. Actually, who's got it worse than China in terms of their electricity grid? It's bloody the EU. Yeah. They got the oldest electricity grid in the world by a long shot. And the
EU was best in class, and has just not upgraded it at all, and just let it.
I think they need US $1 trillion spent on their electrical grid to decarbonize and add all this new technology, etc., to it, and supporting AI data centers, etc. So yeah, that was the call there. So yeah, like you said, a lot of copper needed to do that. And I think these short term moves downward in copper are exactly that, just short term. And like Citi said last week, they expect copper to be $12,000 a ton, average $12,000 a ton in 2025. And I think this all can be done. Like copper can still go higher without China's construction industry really humming along. I think the rest of the world and the capex that needs to be spent there, and even India, will make up more than make up the difference there.
Yep.
So yeah. All right, beautiful.
Not bad. There was another. So I'm looking at some other things. So like I said last week, our Australian Investment Summit went really well over in London. Wellnex spoke pretty well about the dual listing that they've got coming up. They're also over there talking. So this is a stock that we hold. We are mandated to, but I'm in love with myself. Just a profitable company that's doing quite well. And it actually saw a little bit of energy on the charts. It's just coming off a touch today, which is interesting, but it's been propped up quite well. The one that has interest me is another one that I hold. Okay. And so full disclosure, I am talking my own book, but these are companies that I hold for a reason. Before Pay. Hang on, I'll pull it up here. Remember Before Pay?
Yep.
I got the chart.
B4P.
B4P.
Yep, B4P.
I put out a note to clients. Full disclosure, I hold, obviously, blah, blah, blah. But a note to all clients yesterday talking about it's broken through on the chart. You can see that okay?
Yeah, mate.
Yep. It's broken out of the downtrend that's there, but also they've got earnings coming up in a couple of weeks. I've got no reason to think that it's not going to continue to be showing that strong increase in profitability, margins higher, defaults lower, advances higher. That simple three sort of thing. They've also launched something called Carrington Labs, which is a business to business thing that uses it's something that uses the strength of their AI. Before Pay had this really good thing that everyone's sort of underrated, which is that they got access to your banking details as you gave it to them, right? They didn't hack it. Yep. You give them the details and they run through all of these things to talk about, to do a proper assessment of what sort of a borrower you are.
Yep.
And whether or not they should lend to you and then sort of put a volume and a dollar amount on how much they can lend to you. It's far more, all the hassle that I got about Before Pay when I first went in and we seeded this thing at theoretically 20 cents a few years ago was, it's all the headache that I had, and people didn't understand that they're actually doing more of an assessment for a $500 loan than a bank does for a $5 million loan for your house. I could guarantee you that is the case. So anyway, so now they're doing something with Carrington Labs, which I've done. It's a stock to watch. Like I said, I own. I will not be selling anything now. If earnings do rip, and I think that they will, I might be offering a little bit into the market and see how we go. But long term, I'm a definite holder. That's my book talk for the week. Heath, what about you? Book talk. My book talk for.
I mean, that annoys me that people have a go at you for talking a book. Aren't we all talking our own book? Aren't we all, we've got a view on the market.
It's when you don't disclose it that I get really shirty, right? Yeah. If you're full, open and just go, I'm in this for a reason. That's why I'm talking about it. That's why I own it.
Yep.
That's fine. Go nuts.
I see so many people, have a go at you saying, oh, you're pumping your stocks or you're pumping your book. And it's like, we've all got a view on the market. And we've all taken a position to correlate with that view. Of course, we're going to talk our books. I mean, you'd be silly not to. I mean, I've got a view on the market, and myself and my clients are all positioned that way. I mean, Anyway, I'll share my screen again. Okay. What am I sharing? Oil.
And then I'll pull up a footy tip, and then we'll check out. Okay, there's been a good hustle, good meeting, good Zoom meeting, mate. Well done.
Yeah, it has.
Good Zoom meeting.
Let's circle back to this, and
we're going to circle back.
Yeah, we can.
Are you circling back?
Yeah.
We'll put that on the back burner, and we'll circle back. Okay.
Ignore these lines; they're very old ones. I haven't deleted. But oil.
You hassle me so much for my charting, mate. I tell you, come at me with this.
Oil's looking quite good here. If I pull up these lines, they get a beautiful little wedge forming here. And I think it's going to break out of that to the upside very, very soon. It's trading around that $80 mark, WTI. there's a real disconnect between the International Energy Agency and OPEC and their predictions for oil growth over the next 12 months. Like I think OPEC is saying 2 million barrels of oil a day growth. IEA is saying, I think 1.2, 1.3. So big disconnect. So it'll be interesting to see who comes out right. It probably splits it down the middle. You can't trust either of them. But oil and gas are one commodity I really like moving forward, and it seems to be tightening up there, ready for an explosive move upwards, in my view. So that's about it. I think, mate.
That's good, mate. Well done. All right. I got last week in the footy tips. Oh, I've got to announce the winner. Hang on, someone told me winner.
Oh, you got a winner.
I've got a winner. Chicken dinner. And the amazing Will, sent me the winner, and I've lost it. Hang on. He sent me the winner, chicken dinner. Maybe put it on email. Hey, okay. I'm proud to announce the winner of the Barclay Pierce Capital NRL footy tipping week 13 to 16 winner of that section, whatever. Congratulations, Houstonian. You have won, and you'll receive your gift voucher via email. We've already spoken to Houstonian. Houstonian gets the prize because Houstonian's husband has an account with us. You have to have an account to be able to claim the prize. Anyone can play, but to be able to pick up the biscuits, you just got to have an open account set to go to receive great advice at a reasonable price in minimal book talking, maximum nice, easy investment products that you can go into, specifically SMAs sitting on a premium platform, which I've managed to build and I'm pretty proud of. So well done. Thank you very much, Houstonian. Right, footy tips. Last week, I got bombed. I got the first one right. I think I had Titans to beat the spread of 8, and they did. I think they got the 7.5. I think it was, but I needed Newcastle to not completely cactus, and they did. They weren't even on the field. I'm backing it up. I'm doubling up on Newcastle this week. I'm going to go Newcastle plus 4.5. I think you're going to get them. Ponga didn't get much game time in the amazing win by New South Wales over Queensland. Ponga came on for Queensland and just could not budge the scoreline enough. Brisbane's got people out. Haas out. Reece Walsh, pretty boy. He was injured. I don't think he's going to play. So I reckon Newcastle are going to redeem themselves from last week and chuck it on. So I'm taking the points for them. I don't know why they're giving them points. It's insane. But anyway, that's it. So Newcastle, I'm redeeming myself. Double your money on this one. Go nuts. Heath, over to you.
Fantastic. I think I got a double win last week.
You did get a double win last week.
I got who was the AFL one? Was it Hawthorn? I'm loving Hawthorn at the moment.
Yeah, you had Hawthorn over at WA or something, didn't it?
Yeah.
With the points.
Yeah, and then had Spain to win the Euro. It's not coming home. Spain won 2-1 in regular time, so that paid $2.45. Not bad. What am I doing this week? I'm giving you a multi this week because I couldn't find huge value in the market. So I'm going Brisbane to beat your Sydney Swans at the Gabba, into Hawthorn to beat Collingwood, and it's going to pay $3.33. So that's decent money there. I think Brisbane are the form team of the competition and going to do very well.
They're doing the right things at the right time, that is for sure. And the Swans, I think, just don't. They're 3 games ahead. They're 3 clear. It's difficult to get motivated when you know you're already going to get that top spot. At this stage, it's going to be very difficult for someone to pry it off them. But a top 4 finish is pretty much guaranteed. So why go over the top? It's tough to find a second gear when you're this good. It's tough to find the just find the motivation to get out of bed. I find that myself as well in all things that I do. Talking about book talking with Jimmy James. So thank you very much, everyone, for joining us on this one. Well done to the New South Wales Blues. Well done to Houstonian for the tipping as well. Well done to how'd the Crows go last week? They lost.
Oh, we won, mate. We beat St Kilda easily by 5 goals.
Oh, amazingly watching because there is a Friday night game, Sydney Collingwood at the SCG coming up in a couple of weeks.
Yep.
We're all already talking about how we're supposed to be able to get there and get in, and everyone's jagging the members tickets as you do. Everyone in Sydney.
Yep.
Everyone in Sydney knows someone or has members tickets. I think the members tickets are stupid. I would rather have a seat set for me so that I can arrive whenever I need to arrive, and the seat will be there. Arriving 3 hours before the game to put a sticker on the seat, and then going and doing whatever you need to do, and then coming back is insane. But anyway, look, everyone said I want Collingwood to be winning so that game is their life or death, and I want to bury them
I
at the
don't think
SCG.
I don't think you're going to get that. Collingwood look like they're on their last legs. Their injuries are still piling up, and they're playing Hawthorn this week, and I think the Hawks are going to roll them by 3 or 4 goals. So
we'll see how we go.
Yeah.
Last words, Heath. Otherwise, I'm going to sign it off.
I'm done, mate. I'm all out.
Thank you very much. You have been listening to the Theory of Thing Investment Podcast, brought to you by. No, it's not really. It's wakey. It's just because I've got it on here, but it's actually really nice. It's a dissolvable thing that you put. Don't worry. Anyway, I'll get into you later. Thanks very much for that work. James Whelan. My name is James Whelan, Managing Director of Barclay Pearce Capital's Wealth Management Team. I've got to go back to my real job of actually managing a wealth management team as well. I've been joined by Heath Moss of HLM Investments. If you need any advice, talk to them, talk to me, do whatever you need to do. I don't, I'm not bothered by that sort of thing. Thank you very much.
Have a good weekend, everyone. Bye.
How do I stop recording? There you go. That button. Yeah. Yes.
Yep.
Okay.
Yep.
Thanks.